The trust is a big factor there. Remember, the less you pay for something, the more you return. The more you pay for something, the less you return. Buying great quality companies at good prices. That should be your focus. The most overpriced and overhyped stocks would fall the most. That is the key there. All right, guys, how to flourish in bull and bear markets. These are very cliche questions being brought up. I want to bring up an example. This is marketwatch.com. 5 things you really should not buy in 2023. Here's the way I think it should be viewed. 5 things you really should not buy. I don't care if it's a bull or bear market. If you're trying to time what you buy, when you buy it based on where we are in the cycle, I just think that's idiotic. Now, with that said, I'm being somewhat of a hypocrite. I would buy a lot more stocks today if stocks weren't as overvalued as they are today. But I believe that with the overvaluation, stocks will fall a lot more. I'm being less aggressive now, but I'm selling a lot of puts. And Mo and I've talked about this many, many times. Yep. I also have multiple streams of cash flow. I can afford to be pickier. I can afford to wait. In the last 5 years, I've made very little money in stocks and options, relatively, but my net worth has doubled. Why? I have real estate, I have businesses, I have other things going on. So even sitting with a lot of cash, I still did very well. But when people try to sit there and do these BS statements of what to buy during bull and bear markets or how to buy, what's the one thing that matters to us?
Valuation.
Valuation's all that matters. We just did a video in which I showed stocks starting the beginning of this year and the ones that were down the most. No coincidence, the highest PE stocks are down the most. We've said this time and again. We have almost 2,000 videos, maybe 2,000 videos now.
Maybe so.
And we always said the most overpriced and overhyped stocks would fall the most. Look at Tesla. Tesla. We've been preaching against Tesla for a long time, and we've been quote unquote wrong for a long time. 11/4/21, the stock hit a high of 414. Mo, what is it currently today?
$112.75.
12/27/22, 112. What's that drop? Almost 75%. And guess what, guys? We think it has more to go. Why? This valuation made 0 cents. 0 cents to us. Go watch all of our past videos on Tesla, Workhorse, NIO, Nikola, Palantir. I mean, the list keeps going. Peloton, PayPal. By the way, we love PayPal. We love Palantir at much lower. Most of these companies we can value at much lower prices.
Funny, you said this makes 0 cents at 414. I look at 112 and say this makes 0 cents at 112.
I actually disagree.
Makes more sense.
I actually think there is a case to be made at 112.
You think so?
Now, with that said, a lot of good things have to happen to Tesla for this to work out. At 414, not a lot of good things. Miracles have to happen.
Yeah.
Literally, Jesus Christ himself has to come down, come back again, sit there, go to Tesla, and become the only worker there and just crank out 1 million cars a month for Tesla. And magically decrease the cost of making cars so they can sell a ton more vehicles.
Or create way more people to sell them to.
Correct. And pardon your religious beliefs, Jesus ain't doing that. For a multitude of reasons. You atheists out there can believe that reason. Your diehard religious people can believe whatever reason you want. The bottom line is, this made 0 cents. 112? Okay, I don't agree with that.
Making more sense.
I'm not buying it at 112. Well, yeah, but 250 makes more sense than 414.
Yeah.
But I think 250 is still insane. 112, if everything works out, I think you can sit there and say, if they literally do what they're supposed to do for the next 20 years, sell 10 million cars a year at an average price of $100,000 a car 20 years from now, boom, 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 boom.
But that's starting in 2023. That's the problem.
That's the hard part. No, not $100,000 a car in 2023. It's getting up to $100,000 a car in 2043.
I'd imagine how many cars they need to sell in 2023.
So these are the things that I'm saying. Can I see a case for 112? Yes. But guess what, guys? There's no margin of safety here. In fact, it's the opposite of margin of safety. Yeah. Everything has to work out perfectly. That is the key there. And that's why when it comes to bull and bear, to me, it's all about, guys, where are you going to put your money that has the best value? So let's draw an example. Let's look at a company that's fallen a lot lately, PayPal. Because PayPal is a company that is all-time high of 310 on July 26th of 2021. And we're now 17 months later, and the 52-week low is 66, and it's currently at $68. It is flirting with its 52-week low.
Yeah.
It's absolutely flirting there. Okay, let's see what analysts are expecting from PayPal. EPS, not much growth. I mean, it's growing, don't get me wrong, mid-double digits over the next 4 years. Revenue, okay, not a whole lot.
Mid-single digits.
25% over the next 4 years, mid-single digits. So I look at that saying, wait, how is it selling for 5 times more than it is today? You need a high growth rate and a high return on invested capital to justify that. They have the return on invested capital decently, but it's not like blow me out of the water return on invested capital.
No, it's not like
They're not getting that big of a return on their money. The average for the market on any given year should be 10%. So they're basically averaging the market over the last 5 years. Okay, fine. Things I do like about it, though, I think they're reliable. I think they move fast. They're very pro-customer, and they're accepted all over the world, and they're trusted all over the world.
Yeah, that's a big thing.
The trust is a big factor there.
Yeah, if you're going to go and buy something online from another country, use PayPal.
That's what I personally do. Whenever I want to sell something, I say to people, go on PayPal, buy it from me on PayPal. Why? Because it's very easy to fight that if you don't get the item. Very easy. So let's go to our stock analyzer tool. Now, this is where value comes together with pricing. This tool has been used over 1.2 million times in the last 12 months by our users. We have thousands of users in here, and the average person uses it. Just do the math. It's an insane number of times. This thing is so popular. The reason being is, Mo and I always say every investment's the present value of all future cash flow. This will do the behind the scenes calculation of what that cash flow is. And then based on your desired return, which will include your margin of safety, it'll spit out the number you should pay for the company today. Now that sounds like a lot. If that sounds overwhelming, it isn't.
Or it sounds like something you can't do.
You can. It just takes time. And I was overwhelmed when I first created this model. I was like, okay, am I doing this right? Like, is this really right? But once you understand that every investment is the present value of all future cash flow, it clicks immediately. And whether it's a bull market or bear market, that should be your focus. Buying great quality companies at good prices. I think you buy great quality companies at great prices, but Warren Buffett and Charlie Munger have made this cliche of it's better to buy a great company at a fair price than a fair company at a great price. Let's go run it through on PayPal. Mo, you do a 10-year analysis, I'll do 20 years.
Okay.
So what we're gonna do here is make our low, middle, and high assumptions on this, going from revenue growth, profit margin, free cash flow, PE, and price to free cash flow. We're gonna make very low assumptions here, things like, listen, it's got to do this. Middle, kind of like, hey, they'll probably end up here. And high, like, hey, if they hit a few things, if the world grows a little bit more than expected, et cetera, this is what they'll do. Let's start here with, so this is the hard part about this, is like, these are all assumptions. But the great news about that is you can use these assumptions to get the understanding of where you stand and to look and compare. Mo and I, we do this on I'll do this on PayPal, and I'm sure I've done it 1,000 times on PayPal and put different numbers in. The point is, you shouldn't come up with $300 one time and $20 another time. That's the point. But your range here could be wide, especially considering I'm going 20 years out.
Yeah.
So Mo, you do yours first.
So for revenue growth, I did 3, 5, and 7.
Okay.
Profit margin, 12, 14, 16.
Okay.
Free cash flow margin, 18, 20, and 22.
Okay.
PE, 13, 15, 17. Same for price to free cash flow. Return, 12, 14, and 16.
Okay. So I laughed at those revenue growth numbers.
I figured you would
For
go
20
higher.
years, I did 5, 9, and 13. I think this is an international company. And I think international GDP and wealth will grow at a much higher rate than 3%. Now, 3%, 5%, we'll see. Margin, I put 12, 13 and a half, 15. Free cash flow, I did 18, 20, 22, just like Mo. PE, I did 14, 16, 18. Same thing here, because if they hit these levels, I think they'll justify a much higher PE. I think their return on invested capital will be much greater. And for the return, I did 12, 14, 16, just like Mo. Because remember, the higher the assumptions we make, the more margin of safety. And the higher return means the less price you're paying. The less you pay for something, the more your return. The more you pay for something, the less your return. Okay? So, Mo, give me your ranges.
Ranges 34 to 51 on the low end, 53 to 73 on the high end, and middle ground of 43 to 61.
I have 40 to 60 on the low end, 90 to 130 on the high end, 60 to 90 on the middle section. I have my watch list at $60. It'll notify me on the software, on the app, everything. This is my point where I'm going to start selling puts at below. I actually have puts right now at like 45 and 50, but who knows? The point is, I think that we're in the ballpark here. We're not like crazy. It's not a screaming deal, but I'm like, okay, this is starting to make some sense here.
I think around below 40 would be a screaming deal.
Oh yeah, absolutely. So guys, if this makes sense to you, this is how you should buy during any market, bull, bear, anything. It's easy to fall for the trap of following the hype. I did too. But over time, as I repeated things, we have 2,000 videos on here. Go watch these videos over and over. It's no coincidence that I get messages on Instagram and Twitter saying to me, thank you, Paul. It clicked and I started like really following this. Remember, thank me in 10 years when you've avoided all these big, massive losses on stocks like Peloton and buying over valuation. If you like this, guys, 2 things I need you to do. 1, subscribe to the channel. And 2, check out everythingmoney.com. Join the thousands of people in this community. Check it out. We have a great offer, money back guarantee. Sign up today. In a month, if you don't like it, money, just email us. You're refunded fully, 100%, no questions asked. Thank you for your time.